Moving on, next up we have Microsoft, MSFT. And Microsoft is one of my favorite companies of all time, and I wish I had kept the stock. So I did have Microsoft stock a long time ago, but I sold it just because I wanted to buy more Tesla. And it did happen to be a correct decision, by the way. So Tesla's gone up a lot more than Microsoft, but Microsoft is just, it's a much more low risk company compared to Tesla, right? You have to admit that. And despite how much I believe in Tesla, I would like to add some stocks that kind of diversify my portfolio a bit just within tech. So something that is not like completely out there, something that's still in the tech space, but something that's like a lot more stable than Tesla. And I think that that would serve well my portfolio. However, yeah, it's just I've never gotten the spare cash to do it. I think Microsoft and Facebook are two of the best companies to kind of like just lower your risk and also kind of offer a good return. That can offer a good return in the long term, right? Better than holding cash or better than holding other stocks. Better than holding like, I don't know, Berkshire Hathaway or a Johnson & Johnson or something like that, right? So anyways, that's Microsoft. Moving on, MSTR, MicroStrategy. So MicroStrategy, you know it, it's known as the Bitcoin company, right? Or it's like a Bitcoin hedge fund pretty much at this point. So it's a company run by Michael Saylor, and he's like all in Bitcoin, right? So he literally borrowed money to buy Bitcoin. So he threw all the cash on the company's balance sheet into Bitcoin, and he also borrowed money to buy Bitcoin. So it's essentially like a Bitcoin ETF almost, right? So it's going to track Bitcoin pretty much exactly. Yeah, if you guys, since you guys in America don't have a Bitcoin ETF yet, MSTR is like kind of your best proxy for Bitcoin if you want to trade Bitcoin on the stock market. Because you don't have an ETF, right? So you can always just buy MSTR. Next up, we have Nokia, NOK. So Nokia is one of the best not recovery. They're one of the best like kind of turnaround place. That's the word I'm looking for, right? So everybody knows Nokia as the company that makes those like old cell phones. But they actually don't even like compete in that business anymore. They're more into 5G infrastructure and just telecommunications technology in general. And I think that a lot of people kind of have this notion that Nokia is like a bad company or it's like an outdated company, it's obsolete, it's going away. So nobody believes in Nokia anymore. But I really do think that Nokia is, if you look at what the company is doing, they're slowly gaining market share again in the 5G space. And in terms of valuation, I don't think that they're too highly valued at the moment, which is nice because if they actually achieve what they're trying to achieve, then their market share will increase and the stock price should come up along with it. So I bought in at just around this price right now. I do own 200 shares of Nokia right now, and we'll see where it goes. I do think that long term this could be like a $10 stock, but we'll just have to see how effectively they're able to affect this turnaround. All right, moving on. Next stock we have NVDA, ticker symbol NVDA. And this is obviously also another stock that I've been trying to get into that I haven't been able to get into. It's just been going up and up and up and nonstop. And yeah, I just never, it's always been kind of too hot to touch. NVIDIA, Google, and AMD are the three that I've always wanted, but I never ended up pulling the trigger, and it's such a shame because this stock is an absolute beast. And if you got into NVIDIA early and you made a profit, continue to hold it. If I could, like, if I had one thing to say to that, I would say, like, don't sell it, continue to hold it because this is absolutely an amazing company. So anyways, moving on, next stop we have OSTK, Overstock.com. So Overstock, it's an online retailer, but recently, or not recently, I think they've been in the business for a couple of years. They're getting into cryptocurrencies as well, and I haven't done that much research about it actually. So I have to do more research. It's not a stock that I own at the moment. I have to do more research on it, but I do think that what they're doing is kind of interesting. They have like they're competing in terms of e-commerce, but they also have a hand in the crypto and blockchain space. So I think that in the future we're going to see more and more companies like this where they try to evolve their business. And I just give props to the CEO and to the management of this company for just putting blockchain technology and stuff like that on like the forefront of their agenda, because you have companies that just kind of stagnate and fail to innovate. But what Overstock is doing, from the little research that I have done, is that they are trying to like push towards the blockchain space really hard. So I think that in the future this could be like a company that does really well, especially again if like Bitcoin and crypto in general does well. But I'll have to do more research on precisely exactly like how deeply they're involved in the blockchain space. I read an article somewhere about it and I just thought it was interesting, but I forget all the exact details. So as I said, it's not a stock I own. I have to do more research, and if I like what I see, I might buy into it. Who knows? So anyways, that's Overstock. Next up we have Palantir. And Palantir is a company that I do own some call options in, and also I have shares in as well. So I'm a big believer in Palantir, and Palantir, they do data analytics, they do big data, and they have contracts with like the defense, the United States government, the defense industry. So they have like a contract with the Army or the CIA. So this is obviously a company that's heavily trusted by the United States government, and they do all types of like advanced data analytics stuff that I can't explain to you, because to be honest, don't exactly know how it works either. However, I just think that what they're doing, and I don't need to necessarily know all the details about it, but just by looking at the amount of contracts and the amounts of kind of like hype in the industry around it, I can tell that like their stuff is real. And by hype, I don't mean like Wall Street bets hype. I mean like excitement and like belief and like faith in the like industry and like the quality of the work that Palantir is putting out, because they keep getting contract after contract from not only like the Defense Department of the United States, but also like different companies as well. So they're also trying to branch out into offering their data analytics solutions to just businesses in general. And also my Palantir video on YouTube is one of my most watched videos of all time. So obviously there's a lot of excitement surrounding this stock as well in the like investment space, especially among retail investors. So I think that this is also one of the stocks that has potential to kind of run up big if it does start to run. So it already did a huge run back in the day. And I think at one point it hit like, was it like $40 or something? $45 I think was the max. And then it just kind of fell. But then, I think in the future it has the potential to do another one of those types of runs. So I'm holding my shares, I'm holding my call options, and we'll see where that goes. Okay, so moving on. Next stock we have Regeneron Pharmaceuticals. So Regeneron is the company that makes that antibody treatment, like monoclonal antibody treatment that Donald Trump got when he got 19, right, the virus. So yeah, I do think that their technology is pretty good, right? Because they were the first ones to kind of break into this space and offer this product that was actually proven to be very effective against CV-19. Right, so ever since then, the stock has like skyrocketed and then it fell back down a bit now. I did invest in this company for a while, but then I did sell my shares. I think I sold it just around like break even. So I didn't lose money, but I didn't really make that much either. I made like maybe less than like 5%. It was literally like just exactly break even. So the reason why I sold was that I wanted to invest in other stuff, and I felt like I don't really understand the pharmaceutical and medical field enough to really be a long-term shareholder. I kind of got into it just thinking that it was going to be like a great stock, and then it didn't really move. It went down a bit and then it went back up. and I just didn't really feel comfortable holding it for the long term because my medical knowledge is lacking, and I'm not a doctor or anything, right? So I really feel like to be a long term holder in like pharmaceutical companies, you at least have to have some medical background or know what like how things in the medical space work, right? And I just felt like that's not my that's not where my area of expertise is. So that's why I sold, and I found like better investments too, right? So I invest in like Tesla, as I said, or Bitcoin and things like that, and Palantir, right? So I just think that things like that, like tech and innovation, is a little bit more down my alley. Not that, medical stuff isn't innovation. Regeneron is obviously still innovation, I would say, but it's just, I would be more comfortable with being in like tech and stuff like that. Anyways, moving on. Next one is Riot. Again, not going to spend too much time on this. This is another Bitcoin miner. So moving on to the next one is RKT, Rocket Companies. So not to be confused with Rocket Labs. That's another company that is not on the list, but that I heard about people talking about that. But this is Rocket Companies. So Rocket Companies, they offer like an app that allows people to sign up for like mortgages really easily. I think that this industry is gonna like expand in the future, making it easy for people to access financial services. Is definitely one of the biggest things that's coming down the pipeline in the future. That is gonna be more and more popular in the future. But I just think that Rocket Companies is a heavily shorted company. So maybe there's a potential for a short squeeze as well, but it's just not a very it's not a company that's loved by Wall Street. Let me just say that, right? So the company's pretty beaten down, and I think that it could be the valuation is very low, by the way. So I think it could be like a good long-term play if they manage to do well. But I don't know, for some reason, Wall Street just doesn't like this stock, and I think maybe it has something to do with interest rates. I heard that low interest rates are not really like a good environment for companies like Rocket, who competes in mortgages and insurance and all this stuff. But yeah, I think that interest rates are going to stay low for a really long time, so maybe it won't do that well for the short term, at least until interest rates start going up. But if you really believe in the company or believe in the vision of it being able to provide more accessible financial services to more people, I think that this could be an interesting kind of play, and it's super cheap, like I said, in terms of valuation. I'm not just talking about the stock price itself. Again, that doesn't matter, right? I'm talking about the valuation. And talk about low valuations. Root Insurance is another one, ticker symbol Root. So Root offers car insurance. And they're one of those kind of preppy new age companies that you can download an app and then sign up for car insurance right on the app, and it helps you avoid dealing with a traditional car insurance company that's old and inefficient, and you have to send them paperwork and stuff like that, right? It's all through the app when you're doing when you're signing up for insurance through Root. However, this stock is once again a company that's just been beaten down, and it's near its pretty much at its 52-week low. I think that the main problem was that they had a really bad quarter last earnings report, and people kind of just lost faith in them. I think that in the future, if you do believe that Root is a company that will succeed in the car insurance space, again, insurance is hard, right? So there's companies like Lemonade, which are a lot bigger than Root, that have struggled recently as well. So Root's is kind of the same idea as Lemonade, except Lemonade is just getting into car insurance, I think, except Root started with car insurance, and Root only has car insurance. So yeah, I don't know about all these kind of new age insurance companies, but if you're one to if you have a specific reason to believe in Root, and you think that they're going to succeed in the future, or if you're just a user of the product and you like the product, maybe this is one you might want to consider. But I don't know enough about it, right? And besides, I'm Canadian, and Root is an American company that competes in the American insurance industry. So I really don't have that deep of an understanding of that industry. And personally, I wouldn't feel comfortable investing in Root at this point. Maybe like for a small trade, right? Because it's so cheap in terms of valuation that I could just like swing trade it from time to time if I had some like spare cash or something. But long-term invest, I do feel like this one is a little bit risky for me to feel comfortable holding it long-term. But yeah, anyways, that's just me. If you guys know more about Root Insurance and if you guys like the product, if you use it, let me know. But yeah, I'm just gonna like keep it on my watch list, but I won't invest in it for now. Moving on, the next one is Shopify. Yeah, Shopify is one of the like those like holy grail companies like Google that I've always wanted, like NVDA, right? That's just been flying high. And I used to have a couple of shares of Shopify, but I sold them, which was a bad decision because it just kept on going up after I sold them. So that was a huge mistake on my part, and I admit responsibility for that. I should not have sold my Shopify shares, and I learned my lesson. So, you know, Shopify is such a great company, and despite having like a super high valuation, I do think that they are going to consistently succeed in the future. And I think they're already the biggest company in Canada, and I see that. And I see no signs of them stopping, right? So I think Shopify, their business, is just going to continue to grow and continue to grow. So yeah, it's one of the absolutely like best companies on the stock market right now, in my opinion. And I love to get back into Shopify once I get some, you know, more cash to put into my account. But I'm running a little bit low on cash right now. Okay, so anyways, that's Shopify. Next up, we have SoFi. And SoFi was a company that I invested in recently, and you guys know SoFi, right? So SoFi, they own the stadium. They have a stadium. Isn't that cool? But they're a financial services company. Okay, so like sports is not like their main thing. The stadium thing is just to kind of get the word out and to promote the brand as part of their marketing strategy. But they really mean to be the one-stop shop for all financial services. Like it's an app that you can like get your student loan refinanced. You can like get a credit card on it. They offer a checking or savings account. You can trade stocks and crypto with it. So it's like a one-stop shop for every single financial service that you can think of, right? So essentially they're looking to just replace your bank altogether because, you know, once you have all the SoFi products, you don't really need banks anymore, right? Because you have your checking and savings account taken care of. You have your brokerage needs taken care of with stocks and trading crypto. And then you can also get like loans and stuff and your credit card. So I absolutely love what SoFi is doing. Yeah, this is a stock that I want to be in for the long term. So right now it's gone up quite a bit. I bought in at around like $16 a share or $17 a share, but now it's like almost hitting $19 a share. I think it traded briefly above 19 for like a brief while earlier this week as well. So yeah, I think SoFi is such a great company, and I think that their business is going to continue to grow. So financial services, guys, this space is huge, okay? So it's not going to be like a winner takes all scenario, but I do think that SoFi is going to be one of the players that takes a lot of the market share in the future, judging from, you know, what I'm seeing of them doing. So that's SoFi. Next up, we have Tesla. Yeah, like what can I say about Tesla? You guys are sick of me hearing about me talk about Tesla. So I talk about Tesla consistently for multiple videos, like probably like a couple times a month at least for like the past year or so. So there's nothing else that I can say about Tesla that you guys haven't already heard me talk about. So I'm not going to spend that much time talking about Tesla, but let me just say like one thing, like how about that robot, you know, like it's not crazy. Like Elon Musk is absolutely insane guy. Do not bet against Elon Musk. That's like rule one of Wall Street. Okay, so yeah, that's Tesla. Next up, we have Tattooed Chef, TDCF. And I know a lot of viewers of this channel also watch Jeremy from Financial Education. And you would know that TDCF is his biggest position. Now, I don't have any TDCF shares. But I do think that the plant-based food industry is going to be bigger and bigger in the future. The problem that I have with TDCF is that I haven't tried their products, right? So they're not in Canada, and I haven't been able to go to America recently because of the pandemic. So, otherwise I would totally just I live in Southern Ontario, so it's not that big of a deal for me to drive to Niagara Falls or something and just go to a random grocery store and get some during normal times, but unfortunately because of the pandemic I can't. I would love to try their products before I buy the stock. It's just a big issue that I have with a lot of the plant-based companies is that their products suck, right? They don't taste good, or I just don't like the product, right? I'm not going to invest in a food company if I don't like their food. It's just plain and simple, right? It's just or I'm not going to invest in a company if I don't like their product. It doesn't just have to be food. It applies to anything, right? So, I just want to try TDCF products before I buy into the stock. But this is one that is somewhat intriguing to me. Again, I'm questioning how big the upside is. I know Jeremy says that it's like a 10x upside, but I don't know about 10x, right? So, it's a food company at the end of the day, right? It's not like the next Tesla or something. But I'm sure he has his reasons. But for me, I'm just gonna stay on the sidelines for now. If TDCF crashes really, really hard, if it gets to $12 a share or something, then yeah, sure, I'll pick some up. But I'm just not fully convinced at the moment. If I try a bite of the food, I'm holy crap, this is good. Maybe I'll just buy a few shares, but I don't know. I'm not as passionate about the food and beverage industry as Jeremy is, right? Because I know he invested in National Beverage Company, which makes LaCroix, and he it talks about Monster Energy all the time, right? I'm not really that in tune, or I don't have my fingers on the pulse of that industry. So maybe he knows more, but I'll just watch on the side for now. So last two, wow, we finally got to the end of the video, right? I don't know how long this video is, but it's probably an hour by now, I think. So sorry for dragging on for so long, but we're almost done. The last two is WBA and ZEV. So WBA is Walgreens Boots Alliance. So they're one of the largest pharmaceutical chains, retail stores, pharmacies in America. Walgreens, it's either Walgreens or CVS, right? I think this is a needs-based business. I don't own any shares in Walgreens, but this is one that is very interesting to me because they are a dividend-paying stock as well, right? So the dividend right now is 4%, just over 4%. I think that if you're kind of risk averse and you just need something to diversify your portfolio, again, I'm super into tech, right? I'm super into innovation. So something like a Walgreens Boots Alliance doesn't interest me that much. But if I wanted to have some stable income and stuff like that, I would definitely consider Walgreens Boots Alliance as one of the stocks in my portfolio. Adds a lot of diversity and also gives a stable cash flow. I don't think that they're going to cut their dividends anytime soon because, as I said, their business is needs-based. So people are not going to stop going to Walgreens, right? So that's Walgreens. And lastly, we have ZEV, which is Lightning E-Motors. Again, this is not a stock that I own. However, this is something that is very interesting. So this used to be a SPAC as well, and they did a SPAC merger, and the stock has crashed quite significantly since the merger. But that just makes it more attractive from a valuation perspective, right? So in case you don't know what Lightning E-Motors is, they do retrofits, right? So they buy chassis from Ford, transit vehicles, and then they like retrofit an electric component to make them zero emission. So that's what the ticker means, like zero emission electric vehicle. So yeah, Lightning e-motors is kind of an interesting concept because they don't have to like manufacture everything by themselves. They just manufacture the important parts, right? So again, a lot of the components that go into regular gasoline vehicles are the same components that go into like electric vehicles, right? If you're building an electric vehicle, you don't necessarily need a completely different chassis compared to a gasoline vehicle. So why not just focus on building the electric components and leave the easy stuff, or not the easy stuff, but like the stuff that companies like Ford or GM, leave that stuff that they do well, like building chassis and stuff like that, leave that stuff to them, right? And you can just buy it off of them for cheap and put your own components in. So I think that is a very interesting concept. And what Lightning e-motors does is that they focus on delivering delivery vehicles, or companies are vehicles that companies use. Lightning e-motors, for example, you don't really have to care about how good the vehicles look. Not that they can look absolutely terrible, but you know what I mean, right? Like when businesses buy delivery vehicles, they're not really that into the aesthetics. They're into like how functional it is. So I think that with something like Lightning e-motors, it removes a lot of the different like factors that like, oh, what if the vehicle doesn't look good, or what if it's not well received by consumers, right? So I think when you're selling to businesses, as long as you make like a product that looks good enough, that serves a very good practical like that solves an engineering issue, that solves a practical issue, then you'll succeed, right? So I think that's like relatively easier than something like, I don't know, Lucid or Fisker, for example, who is trying to make a product that aesthetically has to look good and also technologically has to be advanced, versus with Lightning e-motors, they only have to kind of cover that technological component. That's just my opinion, though. I might be completely wrong, but I really do like the concept of Lightning e-motors, and this is a company that has I've talked about in the past, and I have found relatively interesting. So we'll see. The stock has not performed well since its IPO, since its SPAC merger, but I think it might do a lot better in the future. I don't know. I'll have to do more research before I consider buying into this stock. Anyways, that was it for the entire series. Wow, that took me a really long time to make, so I would really appreciate it if you guys give me a like for that, and also be sure to subscribe if you haven't already. And as always, be sure to follow me on Twitter and Instagram, links down below for those as well. And I'll see you guys in the next video. Thank you very much.